If you're a trader and this year you didn't really make, don't be too hard on yourself. Let me show you why. I'll show you also two opportunities in this video that you can take advantage of before the end of the year and make some money before the year ends. If this is something that you are interested in or would like to know more about, then watch this video to the end. Hey, what's up friends? Welcome back to the YouTube channel. If this is your first time, you're highly welcome. We love you for coming to visit the channel. If you're an old member, thank you for watching our videos once again. So I'm going to start with the very first thing I said, which is why didn't you make money this year? If you're a forex trader and you didn't make money this year and you trade maybe things like Euro USD, Pound USD, I'll show you why. And like I said, I don't want you to be too hard on yourself because it may be something that you were not looking at. So now, this is what I'm going to do on my chart. I'm going to take my cursor, go to the vertical line here. So I'm going to drag that vertical line to this candlestick. In fact, maybe I should delete this and also delete the, so let our focus be on where I put the vertical line. I put it on this candlestick. Now, observing that, what do you see right now? What do you observe? Just take your attention from this candlestick forward. What do you observe? Okay, I'll help you answer it. What you would notice that you observe is that, let me put that back. What you notice that you observe is a sideways movement. Now, if you count from this candlestick to this current candlestick, this is 12 months. So this was January, February, March, just like that till December, where we are right now. So that means that most of this year, the market has been moving sideways. It has actually been moving sideways between two key levels. If I switch to another chart of mine, the same Euro USD, this shows a bigger picture whereby we know that the main trend was downwards, and we took it that this move upwards so far has been like a pullback, and our expectation is further down. So this movement, this was January, and it just did. In fact, the whole of this year has been more or less a corrective movement between like the 61.8 level and the 38.2 level. It has just like on the monthly chart been going up, down, sideways basically. So with that in mind, you can now begin to understand why a lot of traders may have not made money this year, unlike maybe in 2022 where we had defined months of trend. At least the last few months of the year was a trend upwards. Before that, several months were a trend downwards. So they could have just been taking trades in a particular direction continuously and just making money. But this year it was more of sideways. The movements were closer. You get to catch 100 pips, 200 pips was more difficult this year because most of it was the corrective phase. Yes, of course, some of us still made money from it, trading the daily time frame, the weekly time frame and all of that, understanding that this was the bigger picture. The key thing why we're able to profit, for those of us that profited like myself, was because I understood the bigger picture. The bigger picture was basically that this was, the market had pulled back to a zone and I was looking at the market selling further. But I had the key levels marked out, the 38, the 50, and so anytime it gets to one of them, I expect some kind of pullback, and I follow it in that direction. So that was basically what we were doing. So that's the reason why I said don't be too hard on yourself. It's possible you were not looking at the bigger picture. You didn't really know what was going on in the market this year as a whole. Maybe because of that, when you go up, it's knocks you out. When you go down, it knocks you out. You get, if you like to know more about being profitable consistent in the market, try to follow these weekly analysis videos and catch our strategy of trend following every week. That being said, let's get into two opportunities I talked about that you can use to make money before the year runs out. Now there are two of them and they're just for me. One of them is on Euro USD, and then we're going to, for that purpose, switch to the daily chart. Let me go to the daily chart so you can see it very clearly, or maybe I should use this other chart because of newbies so that it's very clear to them. So the blue candlestick indicates periods of buy, while the red candlestick indicates periods of sell. So we had 3 days of buy, last week, and on Friday we had a sell. So now the same thing kind of happened on pound USD. So the opportunity is kind of on two of them. Now my anticipation is that this pullback we're seeing is actually an opportunity to buy. And that's the opportunity I'm talking about on the two of them. Now I'll show you exactly how I expect you to go take advantage of it. Now for pound USD, if you go to 4 hours chart, this is how it looks like. So from the lowest point to the highest point, all you need to do is to draw a Fibonacci retracement. This is Fibonacci retracement. Just pick it, go to the lowest point of it, click on it, hold and drag up to the highest level, just like that. So once you have done that, you can now see potential zones of pullback. This was the highest, this was the lowest. So now we're having a pullback. What are the potential zones of reversal? It has hit and gone through the 23.6 level. It has also gone through, or rather it hit it, bounced off, came back to it, 38.2 level. Now we may be approaching the 50 level. Now the way I expect you to take advantage of this opportunity is this, very simple. For those of you who maybe have a little more capital, you can already enter in for a buy here and put your stop loss below this 61.8 level. Probably you can maybe use somewhere around here. You get maybe about 40 pips from there, just that range, you understand. But you want it to be such that from the 38.2 level, if you take your cursor up, that's 112 points, about that, about 110 points. And when you take it down to that point, you want a stationary buy at least from where you're buying to, because the potential take profit is this zone at the top. This zone at the top is the potential take profit. That's where you're going to put your TP. So you want between where you are entering for buy to where the potential take profit is to be at least 1-to-1. That's why I would prefer that you actually put maybe a pending order at the 50 level and a pending order at the 61.8 level. The actual best way to take advantage of this is put a pending order at around the 50 level, put a pending order around the 61.8 level, then put your stop loss just before this level, just before the bottom here, this 100 level. That's where the accurate stop loss should be. So this can be your first entry and this one your second entry. This point is if maybe you have more capital and you can maybe take a loss. You understand. If not, just be patient, put a pending order here. When it gets here, you take a buy. Your potential stop loss will be around this level. That is, let me put the cursor there. Be around this level, just close to it. That's where your stop loss should be. So when it triggers at this level, from that level, from the 50 level to where your take profit is going to be, that is a 1-to-1 trade. This will be about 150 pips, and to the potential stop loss is going to be about 140 pips. So it's something like that. So it will be a 1-to-1 trade. If this market pulls down to as low as the 61.8 level, that gives you less risk, because your stop loss will be smaller and your potential take profit will be larger. So that's the opportunity I'm looking at least one last run before the year ends. Now, I'll be further updating us on this. So if you're not following us in our group on WhatsApp or on Telegram, check the link in the description. Follow us for the updates, because you need to get those updates. When the situation is changing, I'll be updating you on it. This way, a lot of people miss out because they're not following the update. As this situation is developing, you need information. Okay, do this now, do this now. We also have live sessions where we get further into this. So now, on Euro USD, it's basically just the same thing. Get the daily, my strategy is once I see 3 days in the same direction, okay, we have a trend. So when the market pulls back, we take a buy or a sell depending on how it is. So now in this case, now go to 4 hours, just the same way too. Okay, I'm trying to be sure that I have the actual correct low there. So I'm dragging from here out. Okay, so let me take it back to 4 hours. Okay, so this is how it looks like on 4 hours. Okay, let me zoom back in. Okay, so this was the high, this is the current low, and right now it's also at about the 38.2 level. So just the same way too, you want to put a penny order here at the 50 level, or if you can take a little more risk, you can just buy immediately. You get using this top here as your potential take profit, this zone here, then this zone at the bottom here as your potential stop loss. So that's it, guys. For forex traders, this is the hint, this is the update. Take advantage of it, make some money before the of course use risk management, you get, because this, of course, the trade, you can also still go straight to your stop loss. That's why we are giving you an expected stop loss level, an expected take profit, you understand. So this is just our idea, what we think should play out, you understand, before the year runs out. If you have gotten value from this video, please consider liking and subscribing and sharing this video with others. So until next week again, I'll see you. Have a blessed holiday.